stock that will perform the best in 2023. Investors' love affair with value stocks in 2022 might be coming to an end. That's very good news for growth stocks, which have taken it on the chin halfway through the year. Before we get started, make sure to hit that like button. Also subscribe to our channel. 1. Booking Holdings. Market value, $77 billion. Analysts' ratings, 17 strong buy, 6 buy, 12 hold, 1 sell, 0 strong sell. Analysts' consensus recommendation, 1.92, buy. In early June, Truist Securities reiterated its buy rating for Booking Holdings, BKNG, $1,896.24, citing results from its proprietary survey which showed solid demand for summertime travel. However, the research firm also lowered its target price on the online travel stock to $3,000 from $3,340, saying inflationary pressures could impact growth estimates. Still, that represents nearly 60% upside potential over the next 12 months and sits well above the average analyst price target of $2,677.67. The holding company has 6 primary travel and hospitality brands: Booking.com, Priceline, Agoda, Rentalcars.com, Kayak and OpenTable. Together, they were responsible for $27.30 billion of travel services booked by its customers in Q1 2022, 129% higher than the year prior. These bookings translated into $2.7 billion in revenue in the quarter, 136% higher than a year earlier. And its non-GAAP net income for the 3-month period was $161 million, versus its year-ago loss of $215 million. I am pleased to report a record $27 billion in gross bookings in the first quarter, the highest quarterly amount in our company's history, said Glenn Fogel, CEO of Booking Holdings. Despite an uncertain macroeconomic environment, we have seen continued strengthening of global travel trends so far in the second quarter of 2022, and we are preparing for a busy summer travel season ahead. That was in early May. And while things have gotten more dicey economically since then, BKNG's long-term prognosis of its various brands remains intact, making it one of the best growth stocks to keep an eye on as macro headwinds ease. One area where the company is working to better its situation is in the U.S. short-term rental market. Speaking at Cowen's 50th Annual Technology, Media, and Telecom Conference in early June, Fogel said that there were 2 things BKNG has done to improve its U.S. business. One was to add free liability insurance for owners of short-term rentals. That's accelerated its U.S. business. The other was to deliver a better payment system for large property managers. That's helping secure more inventory. 2. Agnico Eagle Mines. Market value, $22.8 billion. Dividend yield, 3.1%. Analysts' ratings, 4 strong buy, 10 buy, 2 hold, 0 sell, 0 strong sell. Analysts' consensus recommendation, 1.88, buy. Agnico Eagle Mines, AEM, $50.07, is the 3rd largest global gold producer. It produced 661,000 ounces of gold in Q1, behind only Barrick Gold, 990,000 ounces, and Newmont Mining, NEM, at 1.34 million ounces. Included in Agnico's first quarter results were 52 days of production at Kirkland Lake Gold's mines in Ontario and Australia. AEM merged with Kirkland Lake in February. It now has operations on 3 continents and in 4 countries: Canada, Mexico, Finland and Australia. The $10.7 billion merger saw shareholders receive 0.7935 shares of AEM for every share held in Kirkland Lake. AEM stakeholders own 54% of the combined company, while Kirkland Lake shareholders own the remaining 46%. Former Agnico Eagles CEO Sean Boyd became executive chairman of the merged company, while Tony Mackek, who previously ran Kirkland Lake, took over the chief executive spot post-merger. Not only is Agnico Eagle the 3rd largest gold producer in the world, it is also the largest in Canada. In 2022, it's expected to produce between 3.2 million and 3.4 million ounces from a mineral reserve base of 44.6 million ounces. Its cash cost per ounce is $750 at the midpoint of its 2022 guidance. 3. Clarivate. Market value, $10 billion. Dividend yield, N.A. Analysts' ratings, 3 strong buy, 3 buy, 2 hold, 0 sell, 0 strong sell. Analysts' consensus recommendation, 1.88, buy. Clarivate, CLVT, $14.68, is a global information and data analytics company. It helps more than 50,000 customers in over 180 countries obtain the information necessary to make informed decisions about their organizations and businesses. In 2021, it generated approximately 48% of its revenue from its science segment and 52% from its intellectual property segment. Of the $1.88 billion in sales, 79% was through subscriptions and recurring revenue. The remaining 21% came from one-time transactions. Late last year, Clarivate completed its acquisition of ProQuest, a data and analytics provider to the academic and research communities, for $5.3 billion in cash and stock. Thanks to the acquisition of ProQuest, Clarivate's Q1 2022 revenue was $662.2 million, 54.6% higher than a year later. Excluding acquisitions and foreign currency, its sales grew 4.4% in the first quarter. Its adjusted net income was $155.1 million, 75.4% higher than a year earlier. In addition to acquisitions, CLVT earlier this year pivoted to a customer-focused, rather than product-focused, business strategy called One Clarivate. This will allow it to focus on growth opportunities across its four main customer types: academic and government, life sciences and healthcare, professional services, and consumer products, manufacturing and tech. As a result of this shift, Clarivate expects to generate revenue and adjusted free cash flow of $2.84 billion and $700 million, respectively in 2022. In 2023, it expects revenues of approximately $3 billion and more than $800 million in adjusted free cash flow. 4. Pioneer Natural Resources. Market value, $55.7 billion. Dividend yield, 5.4%. Analysts' ratings, 15 strong buy, 7 buy, 8 hold, 1 sell, 0 strong sell. Analysts' consensus recommendation, 1.84, buy. Pioneer Natural Resources, PXD, $230.17, has the largest number of acres in the Midland Basin in West Texas. This makes it one of the top energy stocks to bet on the oil-producing region. What's more, the company's dividend policy makes it attractive to income-seeking investors. Pioneer pays out a base dividend of 78 cents per share each quarter, as well as 75% of its remaining free cash flow in the form of a variable dividend. Beyond that, it adds value by repurchasing shares. PXD's March payment consisted of its base dividend and $3 per share in variable dividends. Its June payment ballooned to $7.38 a share, made up of its base dividend plus a variable dividend of $6.60. When including its share buybacks, Pioneer Natural Resources yields more than 13% on an annualized basis. In the first quarter, Pioneer not only paid out $1.07 billion in dividends to shareholders, it also repurchased $276 million of its stock at an average cost of $234.89 a share. Approximately 88% of its Q1 2022 free cash flow was returned to shareholders. In terms of production, Pioneer produced 355,000 barrels of oil per day during the first quarter, and 638,000 barrels of oil equivalent, generating $2.3 billion in free cash flow. Its annualized free cash flow over the trailing 12 months is $4.64 billion. Based on its current market cap, that's a free cash flow yield of 8.3%. Anything above 8% is value territory. And with analysts projecting full-year earnings per share to rise 150% year-over-year and revenue to surge 51%, PXD also remains one of the best growth stocks for the rest of 2022. What do you think of our video? Let us know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also remember to subscribe to our channel and enable notifications so you will be the first to know when we upload a new video. Thank you for watching.